Alright guys, so in this video I'll be talking about the weekly range, and this is basically how we want to be anticipating a long or a short entry and catching the weekly range of the body. So if we're anticipating a bearish week to be formed, we want to be entering above the weekly open. So we are entering a short within this wick. So with each wick that you see right here, followed by downwards pressure, we want to be entering near or at the top of the wick for a short targeting the weekly range. Now for a bullish weekly candle, you want to be entering below the weekly open like this. Let's say this week opens up, you want to be entering below this open. So you're entering at or near the wick and you'll catch all of this move up. So for this example, we've got a couple of things merging together. Again, we got key resistance, weekly bearish order block, last up close candle with a wide range body. It breaks down and it's retesting it as resistance right now. So our bias is short. We are anticipating weekly down close candles. So going into this week, let's say this week opens up, and I marked out the red line as the weekly open. So let's say this week opens up. We want to be entering a short above the weekly open, targeting the rest of the week downwards. So mark this out, weekly open. Now let's see if we get something on the H4. So again, this is our weekly OB. And if we look to the left, I'll mark it out in a different color. Remember that video about liquidity voids? Well, we got this liquidity void here still. And let's pretend we do not have all of this price action yet, because we know price will want to rebalance itself, like we mentioned before. And we have this weekly bearish OB. We got this weekly current weekly open. And we got these highs right here. And what do we have? We have bearish OB, last up close candle at a key resistance before we broke structure. So as soon as this candle opens up and we have a bearish bias for the week, we know our setup. We want to be selling short at this H4 or OB, and our stop can go above the wick. And we know we're entering at a premium. So basically this is everything being combined. We got this liquidity void. We got the optimal trade entry. We're entering at a premium. We throw in the weekly open. So we know we are entering above the week open. So we're entering near or at the wick of the week. Our bias is bearish. We are reaching for a bearish OB at a key resistance. So in this case, if you blend everything together, you'll see how well it works when you combine it. So we enter a short above the weekly open. Then as soon as price reaches and falls below the weekly open, you'll see that it gets defended. They'll be like, nah, it's not going back up. It's the high of the week is in, rejection, and it trends lower. And that's how you implement the weekly range. So you want to be entering at the beginning of the week. Let's put in the day dividers. So we got Monday, and Monday forms the high of the week. So that's another scenario that we're watching for, because we're gleaning for an entry during Monday, Tuesday, or Wednesday. Again, we got this bearish OB, liquidity void right here. We're trading above the week open. So this is where it all comes together. Retest of this, short it, and target the lows. And that's how you can implement the weekly open. Of course, you can use it the other way around as well. If you got a bias for a bullish week, you want to be entering below. So let's say this is a bearish week, but let's say if we got a bullish bias upwards and we have a key level of support below this area, then we want to be watching for a deviation below, enter somewhere on a liquidity grab below an old low or something like that. And then we target higher prices, right? So that's it for the weekly range. Cheers.